Micron revenue soars, guidance upgraded on demand. Contract manufacturers who signed fixed-price agreements last year now see margins erode with spot prices climbing on strong demand signals. The forecast signals continued supply constraints through next year with few new entrants able to respond. This forces Samsung to approve new capacity investments inside 9 months or lose data center ground. Equipment vendors stand to benefit from accelerated orders as teams adjust calendars in coming quarters. Module houses without similar contracts will see the sharpest delivery delays. Qualcomm lifts 2026 revenue forecast to $40 billion. Reaching the new target assumes Snapdragon gains substantial Windows share that Intel continues to defend in the laptop segment. The bigger forecast means TSMC will need to prioritize Qualcomm wafers from early 2026 onward. Smaller designers without matching volume commitments will encounter extended lead times and elevated pricing once capacity fills. Rivals at Samsung Foundry must close their technology gap within 18 months to stay relevant. This also pressures MediaTek to accelerate its own PC chip development timeline by at least a year. Chip stocks surge after Micron after-hours rally. Positioning reports indicate most of the after-hours move reflected short covering instead of new long positions entering the names. Analysts raising targets must now square those with capex budgets that baked in this demand last quarter. Memory equipment orders may show slower sequential growth once the initial reaction passes through the supply chain. Foundries and tool providers will feel the mismatch first when actual shipment numbers come in below elevated expectations. Limited follow-through looks likely once earnings season moves past memory names. Runlayer closes $30 million Series B, led by Smash Capital. The modest round size masks the supply agreement that gives Smash preferred access to Runlayer's yield data for the next 18 months at favorable rates. That clause changes how foundries evaluate third-party optimization tools when they refresh vendor lists next year. Competitors must either match the data commitment or focus on narrower point solutions to stay in consideration. This forces other optimization vendors to decide whether to bundle data licensing into their own next contracts. Assort Health raises $120 million Series B from Menlo. Menlo's check buys more than growth capital. It secures data rights that let Assort map provider workflows faster than rivals still selling point solutions. Hospital systems now face integration requests within the next 2 quarters or risk losing claims visibility to payers adopting the tooling first. Competitors must either match the data terms or retreat to narrower ambulatory use cases where workflow lock-in remains weaker. Tactile lands $30 million Series A from Khosla Ventures. Khosla's latest check targets decision engines that replace compliance officers at scale. The real pressure lands on rivals who still sell rules-based software without the new automation layer. Expect their renewal rates to slip once the platform hits production at 3 or more enterprise accounts by next summer. Sales teams at those competitors will face a narrower wedge in the mid-market as procurement teams demand similar workflow speed. The round size itself matters less than the hiring it funds next. Asian markets rebound on U.S. tech earnings. Chip demand signals from earnings are moving indexes again, yet the volume numbers behind those prints remain flat. Watch for Japanese suppliers to raise component prices within 2 quarters if the futures hold. Otherwise, the bounce reverses once fund flows chase the next macro print instead of order books. South Korean foundries feel the same squeeze on margins when buyers delay actual commitments through the end of this fiscal year. The pattern repeats every cycle when headline gains outrun shipment data. Qualcomm unveils new data center chip for Meta. Meta's server roadmap now includes a non-Intel option that undercuts current power budgets by design. The move pressures other hyperscalers to test similar custom sockets before their next refresh cycle closes. Intel will need to either match the efficiency claims in its upcoming chips or accept share loss at 2 large cloud accounts within 18 months. Qualcomm gains a reference design win that competitors must now replicate to stay in the bidding. Tech shares stage after-hours turnaround. Futures climbed on a single beat that left forward projections untouched. Component buyers now hold more negotiating leverage because the print failed to signal sustained demand growth. Expect contract prices to stay soft through the next 2 quarters as makers chase volume over margin. That dynamic caps upside for equipment suppliers tied to those fabs. Procurement calendars at the big three already reflect the weaker outlook. Smaller suppliers feel the pinch first when those orders slip. Oil prices drop to lowest since war start. Lower crude prices trim power costs for fabrication plants that run around the clock. The savings arrive too late to alter this year's equipment orders already locked into lower wafer prices by Q4 or simply widen their own margins instead. Either outcome leaves foundry customers with little immediate pricing power. Energy contracts at those sites typically reset on longer cycles than the spot oil market moves. S&P 500, Nasdaq fall for third straight day. Fund managers now face quarter-end rebalancing with 3 days of red behind them. The recovery after hours changes nothing for order books that closed before the bell. That pressure lands hardest on memory suppliers who just reported strong guidance. One Tier 1 PC maker has already delayed its next chip order cycle by 6 weeks to protect margins. Watch for the ripple when those pullbacks hit foundry utilization rates in Taiwan by March, forcing smaller suppliers to cut prices first, then rally post-earnings. Guidance upgrades rarely survive the next inventory correction when PC shipments stay flat. The after-hours pop ignores how much of that outlook rests on enterprise SSD pull-ins that competitors can still undercut. Samsung now has room to flood the spot market before its own earnings. Buyers at 2 major cloud providers have already pushed back their committed volumes by a quarter. Contract manufacturers report softening demand. That move would cap any sustained margin recovery through the first half. South Korea job market shifts to Samsung SK Hynix. Top engineering grads now bypass the chaebol's traditional training programs for direct roles at the memory giants. The two have raised starting packages 30% above the sector average. That concentration leaves domestic startups without senior process engineers for their own fabs. Smaller foundry projects outside the duopoly miss hiring targets through next year. The result is slower progress on domestic equipment development outside the big two. Recruiters expect the gap to widen once new process nodes ramp. India monitors Telegram for illegal content. Compliance teams in Delhi now demand message logs within hours instead of weeks. Its current architecture routes most traffic outside Indian jurisdiction, which raises latency for any new scanning requirements. Rival apps with local data centers gain an edge on enterprise adoption. Local competitors have already begun marketing their compliance certifications to banks and retailers. Expect the company to open an India office by summer or lose its lead in the SMB messaging market there. China tops supercomputer list with non-AI focus. The list ranking ignores how few commercial workloads actually run on that machine. Teams built the system around domestically produced high-bandwidth memory instead of imported GPUs. That choice accelerates self-sufficiency timelines for domestic EDA tools by at least 12 months, or risk losing appropriations. Tech companies showcase developments at Harrisburg event. Which suppliers are actually watching the Harrisburg floor when the decisions sit 3 layers up the chain? The software updates shown there rarely reach production without passing through contracts already locked in Asia. Hardware tweaks get noted, then shelved until the next cycle. Local events like this surface talent more than they move product roadmaps. Watch the hiring patterns from the firms that attended instead of the demos themselves. North Shore Chamber offers Tech Checkup webinar. Most attendees already know their exposure levels before the North Shore webinar login screen even loads. The real constraint comes from how insurers update their underwriting models after seeing the aggregate questions asked. Smaller firms end up with tighter renewal terms once the chamber summary circulates. Larger vendors gain an indirect view into where the next audit wave will land. Cascadia Tech Academy updates June 2026 programs. Enrollment slots opening now for June 2026 programs rarely fill from the initial announcement round. Aviation tracks face the tightest instructor supply because certified trainers already hold contracts through 2025. The business and design cohorts pull from the same regional pool that local manufacturers use for their own upskilling. Smaller employers lose first pick when placement lists circulate next spring. Expect staffing agencies to start bidding earlier once they see how many seats remain open by fall. Virginia Board of Education holds June 24 meeting. What gets locked into state procurement guidelines after the Virginia Board of Education finishes its June 24 policy round? Vendors already preparing RFPs will face new data residency language that raises compliance costs for any platform serving multiple districts. Meeting notes rarely reveal which vendor comments shaped the final wording. Smaller edtech providers must either absorb added legal spend or exit the state market. Districts with fewer than 5,000 students feel the pinch first when renewal cycles hit. Delaware Tech celebrates nursing program support. Mioli's support gives the company first look at every nursing graduate before other health systems schedule interviews. The announcement timing suggests Mioli is locking talent ahead of summer hiring peaks. Curriculum adjustments now favor the sponsor's shift schedules over general hospital rotations. Smaller clinics lose the ability to shape course content that once reflected broad industry needs. Expect competing employers to counter with their own targeted scholarships within the next academic cycle.